I'm very pleased to be able to moderate this panel today with all those high-caliber panelists. And yeah, thank you for the nice introduction. Today we are talking about the future of financial infrastructure. And in the previous talk, we have already seen one of the interesting building blocks of the infrastructure, which is regulation. And before we dive into that, I'd like to give all the panelists a short minute for self-introduction, starting with Kurt.
Yeah, my name is Kurt Seimers. I'm working for BNP Paribas, the market-leading depository in Germany for investment funds and top 5 global custodian worldwide. I'm responsible for the product strategy and product development for asset manager clients. And we are currently working on solutions such as custody for financial instruments issued on a DLT or the tokenization of fund shares, for example. And I'm part of a global digital asset team.
Benjamin Duvet, I work for BNY Mellon. We are the largest global custodian currently. And thanks for that setup. And I'm part of a digital asset unit where we look at crypto, digital cash, and tokenization across the enterprise and help our different businesses engage, strategize, and to put different initiatives into action.
Perfect. So then my name is Jan Rosam. I'm a partner at EY. Here in Frankfurt, and I have 2 roles. On the one hand side, I'm leading our capital markets consulting practice here in Germany, and on the other hand, I'm leading our digital asset, digital money consulting topics in EMEA. So in that context, I'm advising all kinds of financial service clients on the topic.
Yeah, hi, I'm Ulrich Pankowski. I'm Chief Digital Officer of Börse Stuttgart Group, and I designed the digital strategy of Börse Stuttgart in 2017, where we have created a digital asset ecosystem from the tokenization part, various trading venues and options to custody of digital assets. Yeah, and I'm very happy to be here with you guys and seeing you again.
Yeah, I'm Simon. I'm head of digital assets at Officer Lampe. I'm not at the largest or any global custodian, but I'm happy to say that we are the only German and I think even European bank that has a crypto custody license, crypto registrar license, and a crypto custody, crypto manco license as well.
Thank you very much. And that's kind of big news as of today, right? You just issued the first crypto security by yourself.
Yeah, so fun fact, I was standing at the EY booth basically yesterday evening because we really had to finally settle the transaction, and very happy to share the news that we are now officially crypto registrar, crypto security and crypto fund shares especially. We have gotten the permission, thank you. We have received the permission from BaFin to do this business as of December last year. And as we have also the classical depository in the bank and now also the crypto registrar function, we are one of the very, very few to actually issue not only crypto securities but crypto fund shares as well.
And for fund shares, Kurt is one of the experts with his more than 24 years of experience. So talking about the financial infrastructure of the future with regards to the fund industry, what are the next building blocks and the next steps ahead in that regard?
Yeah, I think we need to look at the European regulation because for us it's a regulated business. So 2 weeks ago there was the vote of the regulation on a pilot regime for capital market infrastructure based on a DLT. And as well a change in MiFID II. So MiFID is the Markets in Financial Instruments Directive, so regulating the investment firms, trading venues, custodians, etc. And in these new regulations, there are 2 points. One is that you have, for the first time ever, financial instruments issued on a DLT will be considered as financial instruments under MiFID. So similar to what the German legislator did with crypto securities, which are securities under the German Custody Act. And on the other side, we will have a kind of sandbox regime in Europe where market participants such as trading venues, CSDs, so central securities depositories, or new players such as fintechs or banks can position themselves to issue, trade, and safekeep financial instruments on a DLT environment. And it's a sandbox because it will be exempted from specific regulations such as CSDR or MiFID II. So there will be some points which will make it easier for market participants to test these kind of transactions. And it will be in place starting beginning of next year for 3 years. And after the 3 years testing period, it will be decided by the European Union if they will prolongate the test regime for another 3 years or if it will go live and implemented as such. And so maybe in 3 years' time, we would have a capital market infrastructure based on DLT in parallel to the traditional regime, because the traditional regime will still be in place. But I think it's a great news for the capital market industry.
Absolutely, it sounds really interesting. And my question to you, because you're monitoring this trend quite intensively, is there a lot of interest from the industry in this pilot regime, or is it like only slowly taking off?
Yeah, it's a good question. We know from the German CSD Clearstream that they are currently working on a D7 platform. It's all about preparing themselves to have a market infrastructure based on DLT. So I guess there will be some CSDs in Europe who will participate to this pilot regime. We as a bank are currently looking at what role we could play in this pilot regime, being it issuing agent, paying agent, a custodian for future DLT-based financial instruments. So we need to see what will be the final participation rate, because if there is nobody participating in it, after 3 years it will be dead and there will be no capital market infrastructure on a DLT. So there is a big interest.
So pessimistic, or
yeah, but
some will
that's
participate.
it. So we all need to participate, otherwise the EU will not vote for prolongation of this regime or put it live.
Makes sense. So I see BNP will be in it, right?
Yes.
And another question, talking about the role of banks, and particularly also the role of exchanges. In my perception, I see that there's some kind of strong convergence in the services that exchanges are delivering or starting to deliver, as well as banks. So exchanges starting their own custody business, such as Börse Stuttgart, like for digital assets, and also some exchanges starting to offer other services like lending. Also, do you, in general, just as a question to the group, see some kind of convergence in this regard?
Yeah, so I guess looking right and left, everyone is nodding. Yeah, so yeah, you can see it. I mean, I think over the last 3 years, a lot of market participants have started to dig into the topic, you know, especially going for the regulatory part. What kind of licenses do we need? So when we had 2020, I think that was actually a brilliant event. AML 5 directive come in, crypto custody license, gave a complete different picture on the industry, because before that, crypto, for instance, was like, oh, that's really nasty, that we don't want to touch that. And after that, oh, there's a regulatory, let's say, framework that we have, and we can, you know, get the license, we can start working with it. And it changed completely also the view from an institutional perspective. So after 2020, we got a lot more attention on the institutional side. And I think what we have now is that market participants like Börse Stuttgart, I think we are within Europe among the 10th largest exchanges from the traditional side. By far on the crypto side, I think we are the top traditional exchange with a crypto exposure larger than any other exchange in Europe from what we have on the offering side. And obviously we try to, you know, look at the whole value chain of things and look at where we can position ourselves, but not for a positioning sake of view, but just from a customer perspective. If you want to offer products to your customer, I think you need more to have just a trading menu. You need to have a tokenization, you need to have trading facilities, you need to have custody. And now what I see is that right now the market participants on the institutional side are trying to, you know, get everything in line so they're ready. What I think in the future will happen a lot more is partnerships. So there will be more partnerships, because if you want to offer really nice products out there, you need to be a bank, you need to be somehow an exchange or have exchangeable activity, whether it is MTF, real exchange, or OTC, and then you have to have custody. And now building everything on your own is okay. We started that, we have our ecosystem, but I think in the future, I think we're very open, and others as well, to offer these partnerships. And a bank is a significant, from a license perspective, a relevant partner in that area.
Maybe to add on to that, I think when we look at the topic from a bank's perspective, but also as a global orchestrator of capital markets, we always see three components, right? It's the regulatory component, and I think you see in Simon's example there that good regulation and engaging with the regulator enables new services and a thought process. When you see, for example, how far along people are in the German ecosystem, that's also part to regulation. It's a very important component. The second component for us is engaging with the existing capital markets infrastructure, because there's a regulation connection there. There are certain roles and responsibilities which are there for a reason. So it's how do we evolve this? How do we partner? How do we work along that line and not go from that, oh, we think DLT will offer this, all the solution for everything, but maybe that's 15 years down the road, who knows? And maybe that will never happen, but how do we get there and how do we go on that journey? But I think the most important part from our perspective is our clients. They don't really care, right? They want their products and they want their services and they want a digital journey which fits with the way they themselves have their core systems, their infrastructure, their operations aligned, right? And we want to take them on that journey. So we always ask when people come to us and pitch, or we have this all-encompassing digital assets ecosystem, we can do everything for you, and then you ask, but how do people interact? How do you get the assets out? What happens here? Who takes which regulatory role? Aren't you blurring the line? And I think that's very important for us. It's these three components, but we always think from the client's perspective, right? How to make that journey easy for the client. And we have to be quite honest. When standing here, I think 2-3 years ago, I thought we can do everything with DLT. Now I'm more on that point, where do we start that journey? Because there are not really big systems out there. I mean, everybody built some small use cases, but I don't see the big capital markets application of the topic yet. So I think that's where we have to go for how to get there. And my personal view, and I think also where we as BNY Mellon currently tend to go, is what's that first step that is easy for the three, for the regulator, for the infrastructures we work with, and for our clients first and foremost. And I think it's a trade-off, and it might not be as enthusiastic and full DLT implementation as we all first thought, but I think we need to do that first step, because otherwise we lose momentum. I have people asking me in meetings, very senior meetings, board level people, oh, you all pitched and talked to me about DLT and had all these guys coming in for years. What do you have to show for? And that's a difficult discussion, right? So I think we're back to how do we make that first step, and maybe it's not the full-fledged one. And I think, Jan, we had talked about that. I think with almost everyone here in the group, I regularly talk about these topics. And I think that's where we want to go, and that's also where we see a role, right? As somebody who helps orchestrate that capital market, I'm not allowed to say, but the boring part after all the fancy stuff happened, we try to facilitate that.
In the machine room, so to say.
Maybe to add on what Uli and Ben said, I think what is important is that we see a movement in the financial industry that has already hit other industries, and this is vertical integration. And also the pilot regime is about vertical integration, because currently separated businesses along the value chain come together. And as Ben completely correctly said, the client doesn't care ultimately. The client just wants a service. So the service has improved in other industries via vertical integration, and will be the same for the financial industry, I'm pretty sure. And how to start, same with us. We buy or build additionally new components, I think similarly for Börse Stuttgart, which we then integrate into our existing value chain, to achieve this vertical integration. And then we have to also, of course, partner and try to build it in a modular way that we can connect, for example, another crypto custodians still along in our value chain. Yeah, and without this vertical integration, by the way, we won't achieve the benefits that everybody promises in the DLT landscape. Anyhow, because otherwise, then you simply do it in another way, but simply via many parties that want to earn money.
Yeah, no, I think it's, I mean, to come back to your question, like how will the financial market infrastructure look like in the future? You can see in the discussion very nicely, so you have all kind of players. You have big banks, smaller banks, exchanges. At the end of the day, still, I think we are on a strategy discussion, isn't it? So I think everyone is kind of needs to assess what type of service they want to offer for their clients. And I mean, of course, if you see like an exchange going into custody, they, of course, maybe are in competition with others who today offer custody. So I think it's interesting to see how it will play out. So I think what I think, and coming back to some of the talks which are earlier, I think we are not well, or we're not there yet to formulate what the future will look like. And I think this is maybe also a point why some of the developments are quite slow, because if you look at how far we progress, it's very slow. And of course, the traditional financial industry is kind of looking very skeptically. So where are the benefits? I mean, Ben said, it's like, okay, where can we see the benefits? When can we see the benefits? And how will the infrastructure look like? I think we just don't know yet. But it's definitely interesting to see how it will develop.
Yeah, just two more additions to that one. So first of all, the technical or the technological development on that space, where the industry we're in is so fast, it's very difficult for us as institutionals to, you know, keep up with the speed of new things popping up. If you would want to jump on all these trains, you would have to have immense amount of R&D budget, and probably most of also the larger industrial players don't want to go that way. So obviously you go for partnerships and try to find the ones who have specialized in that area and that you can try to quickly move on. And the other one is the so far missing industry standard on a lot of things. As Jan just said, so we don't know where we're going. So there's a lot of, if we compare crypto digital assets to the traditional finance area, there's lots of things missing that would actually help the industry. If you just look at the travel rule, I cannot implement as a custodian a travel rule solution on my own, as I'm totally dependent on all the other custodians. Blockchain is open, everyone can participate, so we need to have industry standards and solutions, and that requires partnerships as well.
It's why we segregate a little bit, right? So you look at crypto, that's an asset class where there's specific client demand, where clients come and say, we want you as our custodian to be able to safeguard our crypto the same way you do for securities, right? There's then in that execution fund services, which we currently offer. So all these opportunities around that, it's one stream, and crypto is the most mature digital assets. You can implement it, you do that muscle memory, you do that operationalizing of a digital asset through that. So I think that's separate a little bit from if you look at the traditional securities who then digitize, right, and who go into that DLT space. I think there's a big difference. You always will find the same discussion. I mean, you will have it, and you as well. How much do you can charge for crypto today, and how much do you charge for regular custody? It's very difficult to compare the two, right? I mean, but on the other hand, if you look at efficiencies and the overall opportunities around the digital or digitizing traditional securities, that's a huge one. I think, what do we see each year? 22 trillion of issuances globally, right? I mean, just if you tap a little bit, a certain small percentage of that market, and that's just for issuance of debt, I mean, that's huge, right? And I think that's also the way into the asset classes and the opportunity we have now. We can start with the underlying asset and try to restructure the industry from the asset up. And then these ecosystem discussions will come up. And I think it's building that optionality and taking partners and clients on a path where we do a first step, then we do the next one, and then we do the next one. But first you need adoption for the first one. You need critical mass, you need liquidity, you need that velocity everybody wants for their assets to then move on from there. But I think that's important to keep in mind. There are learnings between the two worlds, but I think they're regulatory very different. and they answer to different requests and questions, right? One is just a new asset class, but is a new asset class, right? We just add to the portfolio. But the other one is revamping an industry. And I think that's the second one, that evolution. That's more tricky because you want to hold the asset, you want to trade the asset, and you want to do some yield with that. I think that's nothing new, and we will see that evolve in the crypto space. But how do you do that for a system which has evolved organically over decades, right? That's the more tricky bit.
Maybe I can add, and standardization we get only if we have a European harmonization of the regulation. And therefore, I think the MiFID II change where financial instruments issued on a DLT will be financial instruments under MiFID, like the Germans have done. In France, we have it differently. So in France, for example, financial instruments issued on a DLT are not eligible for custody for traditional banks. So it's a completely different regulatory environment. And with the harmonization at EU level, we will have the same regulatory regime, and then we have the same standardization needs in every country. And I think then we will see some partnerships, harmonizations, market infrastructure players who are collaborating to define the common standards at European level.
But I think that's the danger as well, isn't it? So because we keep up pushing, let's say, okay, let's wait, let's wait. So I mean, and I think this is what we hear yesterday and also today. It's like, okay, we need to start somewhere, and I think this is really where some of the financial institutions are kind of struggling. Where should I start? Because crypto is obviously for a bank difficult to put on a balance sheet. So therefore, everyone is looking at securities, of course, because this is an asset class which everyone is used to. So, but again, I think we need to start somewhere and stop waiting for things to come.
But Jan, I think we are in the best spot here to start. Yeah, we are in Germany where we have a proper regulation for crypto and for digital securities. Yeah, both possible. And by the way, leveraging the same technology stack underneath. You have an issuance component, you have a safekeeping or custody component, you have a trading component. Ultimately, you can use it similarly, yeah, for crypto as for crypto securities or crypto fund shares, which is exactly what we do, by the way. So we have bought the crypto custodian, but we leverage it for the crypto securities and the crypto fund shares. And thereby, I think this is the way to go forward. And in Germany, we have already a sweet spot. Of course, you have to have MiCA and pilot regime in mind. But to be honest, they come in 2 or 3 years. I don't know what the hell blockchain space will look like in 2 or 3 years for those who have been in the space for the last 2 or 3 years. So whatsoever, I start right now. I start building the infrastructure with some regulatory background in terms of the licensees. And then if MiCA comes, perfect, yeah, I'll try to do it in a way that I'm both compliant with MiCA and MiFID, but I already have the business up and running under German regulation.
Exactly, I can just second that. And while we're all, trying to set up everything according to the regulatory regimes that we have, boom, on the left side, there's DeFi just overpassing us. And we're like, oh, whoa, okay. There's another thing we need to take care of now. And yeah, this will be for, as you just said, like in 2 years, the MiCA will be there. What will be the sector looking like? We will have DeFi protocols all over. I mean, we see the growth right now. I think for us on the industry side, it's much more important to also take a look at that and how we can, embrace that new technology and try to make business models that are somehow then compliant with the, let's say, legal regime and the regulatory regime that we have.
Fully agree. The one thing it's important to put in perspective, it's who are the clients you serve? And which are your relevant markets, right? So if you have a predominantly German, European client base who buy your products, so you go more into the retail space, you can start on that ecosystem, for example, in Germany. The moment you try to have that connectivity cross-border, it already gets problematic, as we know, for how can you market your crypto license outside of Germany and so on. And then how to connect a wider capital market into that. And I think that's the question we haven't solved. So I think that on the one side, that's a great thing for Germany because there is an ecosystem building, there's expertise building, there's practical applications building on the one hand. On the other hand, the capital markets don't move forward because Germany is not the core player, and it's always funny. I always have to try to explain people, well, we in Germany are financial innovators. And innovators in the capital markets, nobody believes that because they think that's London and that's New York and that's American banks and other global banks. But that we Germans here are so far along is quite new. I think that's one important thing though. So you have to see the different market and the different clients you serve and how to integrate that. And I think that's the true challenge. And that's where this regulation topics comes in. So Germany is great for securities, right? So, and we saw great crypto regulation. We see some in other countries and developments around maybe more flexible pilot regimes in the UK. We just heard that yesterday and so on. So there's also movement there. But then if you look at cash, digital cash, right, which is one of the topics in our team we also look at, the US is on a completely different speed, path, and trajectory compared to Europe, right? But if you want the ecosystem, you need crypto as an asset class, right? Just because people want it. You need digital cash and traditional securities revamped and the market evolving, and you need cash and that system together, right? So I think it's quite tricky. So that's why I always say this clients, ecosystem, and partners in the industry that really strongly influences each other. And I think that's why you have need some kind of optionality when you build, right? You start somewhere, but you want that optionality to not lock in. You want to have that ability to add or remove partners who don't move in the right direction, right? And you want your clients to not worry about it, right? They just have their relationship with you, and that way you give them the ability to tap into the asset and the asset class and reap the opportunities the technology and the new capital market infrastructure offers without challenging them too much.
But would you say that the lack of digital cash is one of the major obstacles for adoption? And yeah, good.
For me, clearly, yes, because we did some experiments last year with Banque de France on central bank digital currency and with CDC, which is the equivalent of KfW Bank in Germany, on commercial bank digital currencies. And we tested the delivery versus payment for tokenized securities. So it was a French government bond with corporate actions, so coupon payment and so on against CBDC. And the experiment showed we can use the blockchain technology if we have the securities tokens on the blockchain and cash on the blockchain. Without cash, it's difficult because then you have kind of trigger solutions, you build some SWIFT messages and so on. So I believe clearly we need to have a kind of commercial bank or central bank digital currency.
But you use commercial bank money, right, in a lot of your business. So in theory, you should be able to do most of the digital security using some kind of commercial bank money, which is digital money internally in your bank. But still, we don't have a wide application of digital assets. So I think I'm very cautious. I think digital cash enables the end state of the digital securities ecosystem and the capital market, because then you reap the true benefits because you don't have system breaks between fiat and fully digitized security and going back and forth and having different systems and so on. That's great, that's true, but to be honest, in the first step, why not settle in fiat? I don't have that problem. I first have to find a space where can we create meaningful digital securities in a manner that is relevant to the market and where people are willing to participate in, and it needs to start somewhere. And then, of course, I want digital cash because then I can, kill that bridge, which is quite expensive, between a DLT-run security and my regular fiat systems. Or the other thing is, which one works 24/5 or 7, and which one has certain clearing hours and so on. I think that's the other thing. The real limitation is when clients want to have the crypto experience in real securities, meaning trading at different hours, not having these small windows for trading, clearing outside of this hour, that's when the digital cash really becomes relevant from my perspective. But I think I want to push for that, but I first want to start with the securities somehow, right? I think that's a little bit my thing. And then let's bring in the cash to as the icing on the cake later.
But the fun fact is, from a regulatory point of view, we could already do all of that. And we just don't do it, to be honest, as banks. Yeah, we did when we worked back at Commerzbank 2019. We did a transaction with Continental and Siemens where we did a DVP on-chain already 2019 with commercial bank money on-chain and the security after Luxembourg law. Yeah, this was regulatory already possible back then, but no bank is, to be honest, bullish enough yet to issue a stable coin on-chain with their banking license. Yeah, but it's possible, and we can do that.
And what's the reason why no bank is willing to do that?
Because we're not bullish enough.
Bullish.
Yeah.
Or afraid.
Yeah, so that's the other way around. Yeah.
Certain regulatory uncertainties around that and potential
come on.
liability.
Ben, no. Everybody can issue e-money under the e-money regime. Yeah, you need less volume of e-money for settling the transaction because it's flowing much quicker than before. And of course, you have the counterparty risk, but you already have that with the commercial bank money you trade currently with as well. So to be honest, no board member is bullish enough yet to issue a stable coin to settle securities on chain.
I think these are interesting last words because I think we have to end this panel discussion, this very interesting panel discussion right now. But perhaps we can take this discussion to a place outside. I'd love to learn more. Thank you very much, guys. And yeah, thank you.